Hey everybody, Christopher K. Smith. It's my FibLines quarterly update for December 29th of 2018. So this video should last about 10 minutes. We'll give you a brief introduction to the FibLines indicator, review the stock markets, see how they look, review a couple of key symbols, and look at my results for 2018. So first, in terms of a brief introduction to FibLines, here's a long-term chart, a monthly chart of the Dow mini futures, the YM. I'm going to go ahead and add the FibLines indicator. And you can see that once we do that, now all of a sudden the chart looks different. You can see price action in a different light. And basically I have a series of lines here. They have the red lines, which are the major levels. You have a 0 to 100 move, which is identified by the indicator author, myself. Then you have a 161% line, a 261% line, the 423% line, and above that a 685 and an 1108. And these numbers represent the Fibonacci sequence, where each distance is either Fibonacci value of the previous one or the sum of the prior two levels. For example, the 261 is the sum of the 100 and the 161, and the 423 line is the sum of the 261 and the 161 line. So it's a Fibonacci sequence, and it identifies likely areas of support and resistance in the markets. And you can see that the lines themselves are subdivided at further levels. You have the orange lines at the that subdivide the larger areas by 38.2 and 61.8, which are again sort of sub-values of the Fibonacci sequence. And the indicator helps to identify potential areas of support and resistance. So in terms of how the indicator is drawn, basically you would take the Fibonacci retracements tool, which looks like this, and Thinkorswim looks a little percent sign here, and you identify the top and the bottom of Elliott wave 1, or a significant area of support and resistance. Once you do that, then the indicator draws the 161, the 261, and the 423 lines for you. And then you'd have to subdivide each one of these areas and draw the lines to the 38.2 and 61.8. You see, it's a lot of work. Coming up with the levels is a lot of work. Maintaining it's a lot of work, and that's what the FibLines indicator does for you. Essentially, it encodes the levels for the 0 to 100% for each of about 200 symbols, and then it draws all the lines for you automatically. So it only works for about the 200 or so symbols included in the indicator. So with that said, let's go ahead and if you would like to learn more about this indicator, how it works, why it works, go up to YouTube and search for Introduction to FibLines. You'll find the indicator, a video I put up there back in 2016 that describes the indicator and why I think how it works and why it works. Okay, so let's take a look at the market. So obviously it's been a brutal fourth quarter for the stock market. Going back to, let's take a look at say a weekly chart. Actually, let's take a look at a daily. Yeah, I'll say a 3-year weekly. Okay. Yeah, let's go back to the daily and zoom back just a little bit. Actually, let me just find the right chart time frame here. Okay, I was looking for the 3-year daily, and here I have. Okay, so you see early in 2018, we had that sell-off, took us from about 280 on the SPY down to about 250, about a 30-point move. That was kind of a normal pullback, or was considered normal at the time. We rallied up, made a new high, had another pullback right about to that same level, again about 30 points from 290 back to about 260 on the S&P. On the SPY again, rallied up, failed, back to the orange line, rallied up, failed, back to the orange line again. You see at this point now we've had a move from 260 down to about 230, about another 30-point move on the SPY. So at this point we've had sort of double the normal correction. I think it's about 20% off the highs in the S&P. So it's been pretty brutal. It's been some nasty historical comparisons, kind of like the worst December since 1929. You know, really kind of apocalyptic stuff in terms of some of these market moves. But if you look at the long-term picture, you see that we've really just given back most of the gains for 2017. And if we can carefully look back here to, I believe it was November of 2016. This was really the low right here before Trump's election, Trump's victory. So you can see right now we've given up pretty much half of that level. But in the longer scheme of things, we're really only given back about kind of the last year and change worth of profits in terms of the sell-off. So we're at the orange line here. We've had double the normal correction, and at this point I think I'm I'm cautiously optimistic we're going to see better action in 2019. In terms of some of the favorite symbols I like, let me get my notes going here. Okay, so that's the SPY. Similar situation in DIA. Dow also got whacked down to the orange line, expecting some resistance there. QQQ actually had a higher high, all-time high, just as recently as October, and then got slammed down. So it had a much steeper rally than the broader market, and also got corrected much harder also. And then the IWM, the Russell 2000, also got whacked pretty hard. Also almost back actually at this point to the, I believe it's the 2016 lows at this point on the lows before Trump got elected on the Russell. Okay, in terms of some of my favorite tech stocks, you know I'm a big tech investor. I've been with Facebook for a long time. Well, I'm not with it anymore. It had a huge rally up, and this is kind of responsible for some of my lack of great performance this year. Really had to do with Facebook. I had a good year with it last year, but after this earnings, it took it right up to the top of the orange line here. Just got whacked right down, and came down to the, I believe it was the 261 line. Ride back up to the orange line. From there, it's been pretty much south ever since. I stuck with it right about to about $150 is when I got out of it. So I'm out of Facebook, and I don't believe I'm going to get in anytime soon. But I do like the market generally, so I'll play with the indexes there. Costco, another good one. Got whacked down to the red line there. That would be the 261 line. EA, Electronic Arts, video game makers also got whacked all the way down to below the 100 line. Nasty right there. Activision Blizzard ATVI updated. Actually updated to lower levels at this point. I had a higher level interpretation, and I've actually gone back to an earlier one just because it's come down so much. So right down to the 100% line there and moving up. Pepsi added to the NASDAQ 100, strangely enough. It used to be just NASDAQ stocks had to be in the 100. No longer. Pepsi's been added. MasterCard, great stock, great financials, great fundamentals. Also got whacked down pretty hard there from 200 down to about the 170 level. In terms of, there weren't a lot of level updates in this quarterly update for FibLines. I do one update per quarter. Because stocks came down so much, I didn't need to reinterpret the levels to the upside. And recall in the last quarterly video, we added the 685 and the 1100 levels. So stocks have plenty of room to move around in terms of the lines that are in the indicator right now. Most of the other work was around maintenance. I removed a lot of sort of the cats and dogs stocks. Fitbit, GoPro, Bed Bath & Beyond, QVCA, all deleted. And that's pretty much it. In terms of performance, you know, like I said, it wasn't a great year for me. My taxable account down about 6%, a little bit better than the S&P, which is down about 7% as of today. We do have one trading day left. Taxable account down a little bit worse than the S&P. So these are my large accounts. Basically, I just asset allocate those and let them ride. And that was basically, like I said, just giving back 2017's profits. You can see from 2017, you know, it's up about 15% on each one of those accounts. So I've given back maybe half of that gain, or a little bit less in the case of the retirement account. Not unlike the overall market, really, so I do track pretty heavily there. In terms of active trading accounts, my Thinkorswim account was pretty much flat. I mean, I had a pretty good profit up until the last few days of this year. I had a short position in VXX. I was expecting VIX to come down. I did this trade successfully 2 times earlier in 2018, and it worked out well, but VIX has been stubbornly high and has stayed high going into the end of the year. It's probably going to stay bid as well. In terms of positions I have right now, going into 2018, went long some Amazon here. I can talk about that in a minute. And at this point, I have 2 short positions in VIX, long the 43.44 call credit spread, and then a higher level, the 48.51 call credit spread. So very small profit for the year, and this is an active trading account, a small account to sort of play around with. In terms of the Tastyworks account, slightly larger than that. Started out with $10,000, was up as much as 18% at one point. I gave back a lot of that recently. Again, I had a similar position in the VIX. I had a 43 call credit spread that pretty much went out full loss. I lost about $400 on that. It's my biggest loss for the year. Prior to that, I was up about 5% for the year. So I'm up just about 1.4% of Tasty. about 5% total profit, but I have post commissions comes to net liquid, just about 1.4% for the year. So again, gave back a lot of my profits, was doing much better earlier in the year. In terms of positions I have going forward now, again, long Amazon here also from about the, this was the 1450 level. Short TLT, short at 20, 22 call credit spread. I think just like volatility, bonds are going to come back in as the stock market recovers. And over here, similarly, long the January 18th, January 2018 monthly of 43, 46. Call credit spread and VIX, and a similar position, half size from a higher level, 49.52. So I'm looking for VIX to come in. If it doesn't, it's going to take me longer to recover from that. But if you look at a longer term chart of VIX, you know, it really does nothing. If you take a long enough time frame, it really does nothing but go down. Now if you look at the longest possible time frame, I mean, it's just incredible how much it's come down. And they have to keep splitting the VIX, splitting the ETF, just because they can't make it go below zero. So I do expect VIX to come in. It's going to take a while. If it doesn't work out in the January 18 time frame, I'll probably roll that out, expecting VIX to eventually come in. Because unlike some of these other stocks, I think VIX is mean reverting and does have to come in eventually. Okay, oil also took a real drubbing here in 2019. Excuse me, 2018. Got whacked down here. We're also coming up at a seasonal low in oil. Usually we see in early January, and that's been responsible for some of the weakness in the general market also, because some substantial percentage of the S&P is energy stocks. So energy comes in, energy stocks come in, and you can see what that's done to crude oil here. What else? Gold. Also, actually has rallied pretty good here. I'm not much of a gold trader, but has rallied pretty good as the stocks have sold off. Bounced off the orange line here. Some major resistance up here at 13.50 on the gold futures. So that's pretty much it for my quarterly update. I did want to point out one other thing that I believe I'm going to try to cover in a separate video, and that is a range bands system. So let's bring up a stock like Amazon. Actually, I'm not going to get into it in detail, but I'll give you just a tease. And that is that you know about my range bands indicator. It's a trend following indicator that is basically a universal trend following indicator, and it basically identifies highs. It follows. It tells you whether the tradable is trading up or down, and lets you paints the bars according to blue for uptrend and red for downtrend. So it turns out that you can make that a system, and you can actually get the results of that and how much money you would have made if you followed that system. So I'm going to save that for a separate video, and hopefully I'll include that in this quarterly update. So if you're interested in FibLines, you can find them up on the FibTools sales store, fibtools.sells.com for Thinkorswim. You can also get them for TradeStation for free. If you're interested in the FibLines indicator, you can get the full indicator for $99, and that includes 1 year quarterly updates, 4 quarterly updates, of which this is one, and I'll update the indicator for you and give you a video. That's $99. Everything else up here is free, and I'll update the range bands free indicator with the Thinkorswim with the system, and I'll cover that in a separate video. So that's it for me. Again, if you're interested in the FibLines, fibtools.sells.com, and thanks very much for watching.